Hello, everyone, and welcome. Thank you for listening in. My name is Beata Dragovic. I'm the founder of Freedom Chair Financial. We are a financial planning wealth management firm in Boston, Massachusetts. I decided to start Equity Minutes, a webinar series based on my experience working with clients in the biotech and tech fields, clients who face challenging questions in regards to their equity compensation grants while working in a fast-paced, ever-changing environment. Our purpose for the webinars will be to offer you relevant and very simple, brief topics. We would like to bring you information that we find are the most valuable to you as it comes to your financial planning and equity compensation grants. We will make each series very brief but relevant with hopefully 1 to 2 takeaways. 2020 has been a challenging year for many, many people. We cannot say the same about IPOs in the biotech sector. By the middle of 2020, the 34 IPOs have raised more than double than the 28 or so IPOs in the same time in 2019. And that trend is just continuing into the fall. Therefore, we decided to pick a topic around IPOs, planning consideration when your company is going public. It is, I experience it with clients all the time, it is a very exciting time when your company is going public. You feel rewarded for the hard work that you've been doing. And at the same time, also most probably your personal net worth is about to increase significantly. It is definitely a time for great celebration. And at the same time, I also recommend that this is the time to really take a step back and start planning so you maximize the financial benefits of your company stock. Some of the brief topics that we will cover quickly is immediate restriction on stock sale, concentration, revised equity benefits, and we will briefly talk about the financial planning aspect of it as well. So when your company goes public, you can immediately expect an initial lockup period. This basically protects against a steep drop in the stock price by prohibiting employees for selling company stock. This can happen for 6 months to 12 months or even longer. And this is important to know, especially if you were going to earmark the sale of company stock proceeds for more immediate financial planning goals. If you are a key employee or an insider, you might also be subject to blackout periods, and you basically will not be allowed to trade during specific windows such as quarterly before earnings. And this does not just mean key employees, insiders, doesn't just mean any more C-level employees. So you definitely want to anticipate that. If you are a key employee, insider, a 10b5-1 trading plan will most probably have to be put in place. This actually protects you and it protects against insider trading. This trading plan will be basically allow you to sell shares based on a predetermined formula. And this can be as simple as selling a certain amount of shares on a monthly basis in a specific period of time. If your company goes public and you own suddenly a lot of company stock, it is very possible that your net worth will be made up 10, 25%, or even more of your net worth will be made up by your company stock. This is what we call overconcentration. Obviously, there are tax consequences for you to exercise options or sell company stocks. I would not recommend that should be the only reason why you don't diversify. Diversification doesn't just allow you to reduce overall investment risk, but at the same time, it also improves the risk-return trade-off of your portfolio. Once the company goes public, or actually before the private company is about to go public, they look at their equity compensation benefits and they most probably will come up with new benefits for you as it comes to your equity compensation. They will be introducing a new long-term incentive plan that they will use once the company is going public. You most probably not be able to negotiate these benefits, but at the same time, it is very important for you to know them for ongoing planning purposes. And therefore, I recommend that you read and understand the award grants, summaries, summary plan descriptions of these plans. And finally, financial planning goals. We believe very strongly in holistic, personalized, comprehensive financial planning, meaning taking a step back, understanding what's important to you personally, and creating a long-term financial plan based on that. When your company goes public, suddenly your financial planning situation is just about to get more complex. So this is definitely a very good time for you also to take a step back, to really, again, quantify your goals, and most importantly, also earmark various assets to fund your goals. Always expect share price volatility. Remember that stock volatility is very much an integral part of disciplined long-term investing. At the same time, if you're earmarking company stock for more immediate short-term goals, you need to make sure that you understand that share price volatility of your new company stock will be always present, and at the same time, you will have, as we discussed before, you might have many restrictions when you can sell company stock. And finally, as we talked about it before, creating a 10b5-1 trading plan most probably will be in your future. This is a really good time, again, to take a step back and create this trading plan while knowing what assets to earmark, what percentage of your company stock to earmark for more short-term goals. And you can incorporate that into the plan. And also earmarking certain portion of your company stock for more long-term growth, long-term appreciation. And lastly, if you have not done so, this also can be a very good time to meet with an estate attorney and either update or create a comprehensive financial plan, and either update or create a comprehensive estate plan that is in alignment with your personal needs and wishes. And that is for our first mini-series. If you have any questions in regards to today's topic or any other topic around your equity compensation, please feel free to go to freedomtrailfinancial.com and request a consultation with me, or you can also just send me an email directly and I will be happy to get back to you. Thank you so much for listening in and see you in a few weeks.